Sunday, August 6th, 11:41 a.m. New York time. This is a review of a swing trade I took during the week using options. It was a bearish trade, so I used the stock ETF SPY. I used options that expired the past Friday. So we're looking here on the desktop trading platform, Thinkorswim. Stock ETF again loaded up here. Top left, SPY. Two grids. Left grid is the 30-minute chart for 5 days. And the right chart is the daily chart for 1 month, labeled here. Yellow arrow facing down is the day I placed the trade, bought the put options. The green arrow facing down is the day I closed the trade. Going here in the grid on the right, the day I placed the trade, bearish, I placed it bearish. Buying put options, candle, the daily candle was green. It closed green. Contrarian, I was trading bearish when the market closed green. Next day, it opened up, gapped down, and I closed the trade, took my profit. I more than doubled my money in a swing trade in 2 days. That's a beautiful thing. The day I bought my put options, I paid $12 a contract, immediately put a working order on to close them, good to cancel. Since the market gapped down, it gave me more than I expected. That's a good thing. And I closed at $37 per contract. In hindsight, if I kept them open longer into this Thursday, the low of Thursday, which is the beginning of the morning, those same contracts I closed that prior day at $37 in the morning here had a premium at $105. Yeah. So I could have closed them at $105 in hindsight instead of $37. I left a lot of money on the table. Maybe you're one of the people that got out down there. Or maybe you're one of the people not being contrarian, bought the call options, thinking it was going to go higher, and you took a loss. The contract I bought was 445 strike. It was a 4 delta. 4 delta is further away. Yep. So again, the strike I bought, a low, that low of that day I bought. Again, they expired past Friday. Had 3 trading days, so they expired the day I placed the trade. But again, I got out sooner. Nothing wrong with getting out of the trade early when you're a winner versus staying in a bad trade longer and losing more or almost all the capital that you're putting into the trade. Yeah, so good job out of me. Good trade direction, good money management. Wednesday, August 2nd, 07:14 a.m. New York time. Good morning. As well, happy hump day. We're starting the middle of the week. So this is part 2. Looking at the S&P 500 futures since they opened from 6 p.m. last night. So we're looking at the 4-hour chart. Current candle, inside bar. That simply means it didn't take out the high or low that prior 4-hour candle bar. Started 1 a.m. So we closed this 4-hour candle yesterday. News came out. Market gapped down in the futures, 6 p.m. at night. Went down, tested quarters, 45.75 as expected. As well, went inside the zone. Current trend is down since the high of yesterday pre-market. And we already did 100% retest. Here, we already passed it as well too. Take it on the 1 hour. So now we're looking at the 1-hour chart. Bullish pin bar. And the current trend is up. This is a big bullish candle, 1 hour. So maybe we'll get this gap filled today. Or it might be a pump into the 9:30 a.m. U.S. market, stock market opening, and then a dump again. Take it into the 15-minute. So here was the start of the overnight Asian session. Got pumped up and then dumped. Coming into the London session, which opens below the Asian session. So that means, again, more bearish. Went all the way down to the end of the London session, 5. Here, went up. On the 15-minute chart here, we have a bearish pin bar. Look at that one there, sold off. So my thought is, yeah, they're pumping it up into the opening of the economic news that we're going to have this morning. I mentioned pre-market, I think it was 8 or 8:30, I said. Or into that New York session open 9:30. And I am looking to close my options this morning because if we gap down below the close of yesterday at 9:30, that option I bought will have more premium, worth more. Let's put this on a daily chart and look at the broad futures, see how they're doing since they opened last night. Again, this is the daily chart, S&P 500. That's the daily candle, started last night. So again, trend lower, lower, low, high. Tuesday, August 1st, 6:22 p.m. New York time. Good evening. U.S. stock market is closed. The futures market just reopened 22 minutes ago. And this is the first trading day of the new month. So a fast top down on the S&P 500 monthly chart. We closed green for the month of July. Higher high, higher low. The trend is up. The trend is bullish. Also last month, made a new high for the year. Outstanding. Coming into this red area, that's a supply zone. Sellers were here, and it's coming up to retest that. There's a high for last year also, very close. Weekly chart. Yep, last week. Look at that again. Current candle momentum's upside. Midpoint here, potential retest on the downside there. And again, this big candle, this consolidation, big impulse move up, solid body almost. That's very bullish. Then went up higher, higher, staying above 4,500. Big round number. Daily charts. Look here, 4,500, this red horizontal line, 4,600, this big red horizontal line. And that new high of the year right there. Well, when that big red candle went up, it was green at the point up there, rejected 4,600, went down, deep retracement into this consolidation, still above 45.25 here. Then we had these 3 small candles, potentially distribution. And then we had that inside candle popped up, very small candle, not a good follow through. No, today being the first trading day of the month, we made a lower low, lower high, closed red. That candle's a dodgy. In a trend, it often means halfway. So on the downside, big round numbers, 4,550, 4,500. And look at this, a gap down here to get filled. And potential areas on the downside. Let's go look at the futures. Monthly chart, similar as the SPX. Weekly chart, same thing. Up here, gray area zone, prior supply zone. Daily charts. In these past few days here in the futures, S&P 500, it's more like distribution. Yeah. And then this candle here was the one that closed at 5 p.m. today. And then we had the S&P 500 open at 6 p.m. It gapped lower. Gapped lower. Yeah. Intraday here in the 4-hour. I shared this several days ago, my Patreon members. So I was thinking again, this range area, 46.25 quarters. And down here, 45.75 quarters. Potential areas of trades off those levels. Big red candle, 4-hour candle here. Natural retracement. Again, very bearish, that red candle. Impulse move down, look for retracement. Consolidation. Break below it. Right here, that low. So that would have been a good bearish entry. And each of these candles are bearish. Each of these candles are 4 hours. So again, that was a sell-off. Look at that. Dodgy candles on top, distribution. Panic selling, follow through panic selling. And each of these pops, these ticks, wicks, tills on top, never closed, even above that body. Yeah, more bearish than you expect. Saw that last 4-hour candle, inside candle. That was the start at 1 p.m. So at 3:30 p.m., maybe a little bit later. Yeah, maybe it was like around 3:50, 40, something like that. I was bearish, thinking might go lower sometime this week. Let me go buy some SPY puts that expire this Friday, out of the money. Again, the market's open right now. That's why you're seeing price action. Three grids here. The left, S&P 500 cash index, SPX. The middle, SPY. And the far right, ES. So the chart on the left is daily. Chart in the middle is 30 minutes. And chart on the right is 15 minutes. Again, cash market closed at 4 p.m. And you can see extended hours here on the S&P, SPY. Yep. So I bought put options. And I'll show you momentarily on the option chain. If you want to zoom in here, I'll zoom in here. If you want to, I got control of this. It's my toy, leave it alone. This big red candle at the end of the day, the last 30 minutes, huge volume. Yeah. Very bearish leaning. And then extended hours when the market's closed, sell off. Yep. And then futures open, 6 p.m., gap down. Look at that right here. So again, when the Asian session opens at 8 p.m. New York time, and then the London session opens at 2 a.m., expect a lot more volatility into the New York open. And again, if we are going to be trading lower overnight, then today's close, one would expect a market to gap down. So the put options I bought that expire this Friday, thought is, maybe I'll close them tomorrow, hopefully, instead of waiting all week. Let's open up the option chain. S&P 500. Today, near the close of 4 p.m., I was looking at just one particular contract, the SPY that expires this Friday. So these first two strikes, the first one, 464 calls. Again, they all expire this Friday. The 464 calls, that trade was placed at 10:32 a.m. in the morning. Somebody bought them at 18 cents. The largest trade, single trade, 1,704. Okay. They might have closed them already. I didn't take my time to investigate that. That didn't interest me as much. No, what happened was near the end of the day, 15:25 for you civilians, that's 3:25 New York time. Somebody bought the 45 puts, one trade alone. They did 5,000 contracts at 10 cents. Yep. So the stock closed at 456.48, and they bought put options at a lower strike. Yep, much lower. So you take 456, subtract 445. Yeah, it's 11 points different. So they bought put options, 11 strikes lower, 5,000. That's huge every single day this week. The red are the most important ones. The orange second. So after the U.S. market closed today, after the stock market and futures market closed, I was reading my feed and I saw this headline: Fitch downgraded for the United States long-term ratings to AA plus from AAA. At timing, 5:13 p.m. after U.S. markets closed. Thank goodness I got my trade in, small position. Yeah. So again, in the futures market, you already saw a gap down. And look at this. It's doing natural retracement. And then maybe come into the Asian session, it's going to go run down more. So what's going on here? Real briefly, the U.S. going forward does have a budget they need to bring to the table and get the president signed going forward this year. Congress is currently on vacation, but that's it. That's the big event that's getting ready to occur. Why? Because would increase our deficit, and there's concerns. So again, the news came out after the fact